Hello, everybody. Welcome to today's episode of The Daily Dose. Today is Thursday, September 1st. And I just want to say, if you enjoy this type of content, we release a short video like this every day that the stock market is open. And we release a longer video that goes more in depth into some analysis and commentary every weekend. So if you enjoy that, be sure to subscribe here on YouTube or follow wherever you listen to podcasts. So let's get into it. Today, we opened up red. The futures were red. We opened red and kind of were flat most of the day and then rallied to the end of the day. The S&P 500 and the Dow finished green. The NASDAQ finished red. The S&P was up 0.3%. The Dow was up 0.46%, and the NASDAQ was down 0.26%. So after 4 days of losses, we had a little bit of green today on the S&P 500. The 10-year Treasury yield reached a 3.267%, its highest level since June, so as high as it's been since those June lows that we had in the stock market. If we take a look at the year-to-date charts, the NASDAQ's down 24.6%, the S&P 500 is down 16%, the Dow is down 12.88%. So a little bit of commentary here from Wells Fargo head of macro strategy, Mike Shoemaker. I'm going to say Shoemaker. A soft landing looks unlikely. Yeah, I think a lot of people are thinking that at this point. It's going to take a lot for the Fed to get inflation under control. They've already said last week to prepare for more pain in the markets. So that's really what's been wiping out the summer rally that we had. If we take a look at the chart on the S&P 500, yesterday we said that we could get some buying pressure at the bottom of this zone after we sold off right into the middle of it yesterday, and that's really what we saw today. We kind of bounced off the bottom and then bought back up here. Not really expecting any sort of follow through from this. Maybe we get a little bit more buying, come back to the top of this zone or whatnot, to the top of this candle, something like that, and then continue the sell off. That's kind of what the trend would be indicating right now. If we zoom out, the trend is definitely in favor of something like that happening. I mean, maybe we buy back up to this zone, maybe, but we're kind of in this aggressive little slide right now. I don't think this trend ends for a while, and I think we'll know when we break through this trend line for sure. That'll be our indicator that the bear market is over, but we are a long way from that. So let's take a look at Bitcoin. Bitcoin is right under the 20,000 mark. We've kind of been coiling in between these two zones for a little bit now. We've been mentioning it every day. I'm going to mention it again. If we break through this 17.7 zone, that's the danger zone for Bitcoin. Obviously, if we get through there, the next support wouldn't be till around 11,000. And we are in a pretty big downtrend on Bitcoin, so that's something I'm going to be looking at. One thing that I'm going to mention, just because I'm seeing it on the side of my screen, NVIDIA. I saw something last night in the news, kind of a story today that sent NVIDIA lower, that the United States government is ordering them not to sell chips in China or Russia anymore. So obviously that's a big deal with all the tensions going on with us, China and Russia, but additionally, that's a huge market, so that's really going to hurt their business for as long as that's in effect for. So that's why NVIDIA was lower today. A lot of things kind of pushing tech lower. That was one of them. And that's all I really have today. Again, if you enjoy short little videos like this every day that the stock market is open, be sure to subscribe. We also have a weekend video that is usually longer, somewhere between 25 and 45 minutes, and I go into more in-depth analysis, bring up a bunch of charts, and I have some great commentary on there as well. So be sure to tune in tomorrow. The stock market will not be open on Monday, so we won't have a daily dose on Monday, but I'll be sure to release a weekly wrap video this weekend. So until then, thank you for listening.